Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. We are from Group 4 are here to present about our work on the group assignment for Ais205. For our introduction, for this assignment, we are required to create a financial statement of a business using Excel features that we have learned. We are required to analyze the business performance using the financial statement prepared. We use multiple functions and tools to help us completing this assignment, such as what-if analysis, sum, and many more. For this assignment, we created a business called Dash Sports Center, which provides unisex sportswear to the public. Dash Sports Center is an innovative athletic goods retailer and performance hub established to equip the active community with cutting-edge gear that foster movement and supports a healthy lifestyle. Moving on to our adjusted trial balance. For our adjusted trial balance, we use the 3-column adjusted trial balance, which consists of the trial balance column, the adjusting entries column, and the adjusted trial balance column. For our adjusted entries, we have 4 types, which is 2 for the non-current assets, which is office equipment and motor vehicle. 1 is prepaid rent, and 1 is accrued salaries. For our adjusted trial balance, to show the value, we use the formula if. If the sum of the debits column minus the sum of the credit column is greater than 0, then the cell will show the sum of the value. Same goes to the credit column. If the sum of the credit column minus the sum of the debit column is greater than 0, the cell will show the sum of the value. To calculate the total for each column, we use the formula sum. And then for our financial statement, we use the formula to interlink it with our trial balance, which we use the equal to symbol. When we put the equal to symbol, we just click the value from the trial balance and we manage to interlink it from both of the sheet. We also use an operational symbol to calculate the value in the statements. To calculate the sums of the statements, we use the formula sum.
Now let's talk about ratio analysis. This analysis helps users to evaluate the company's performance throughout the financial period. Here we conclude 3 types of ratio, which are profitability, liquidity, and efficiency ratio. For the first part, profitability ratio divided into 2 categories, which are gross profit ratio and net profit ratio. We got gross profit ratio by dividing gross profit and sales. Here we got 59.59%, which indicates that every 1 ringgit of sales, we will get 60 cents of gross profit. And the second one, net profit ratio, we divide the net profit and sales. As you can see from here, we divide the net profit and sales. Here we got 31.67%, and it indicates that for every 1 ringgit of sales, the company obtained 32 cents of net profit. So now let's jump to liquidity ratio. Here liquidity ratio divided into 2 categories. First category is current ratio. We get it by dividing the current asset and current liabilities, which indicates for every 1 ringgit of the current liabilities can be paid using 1.81 ringgit of current asset. The second one is quick ratio. We get it by deducting current asset and prepayment and dividing it with current liabilities, and it indicates within every short period of time every 1 ringgit of the current liability using 1.72 ringgit of the current asset. So let's move to efficiency ratio. For the first part, efficiency ratio, we have inventory turnover by dividing cost of goods sold with average inventory. We got the average inventory by taking the opening inventory here and the closing inventory. We summarize it both, and after that we divided it, and we get the average inventory. And the second part is average collection periods. We get this figure by dividing accounts receivables with credit sales times 8 with 365 days, since we want it in days. So here we get that the debt of the debtors can be paid within 74 days. Now let's move to business scenario of management accounting. Here is the details of our product called the shoes, with selling price of 130 ringgit, variable cost per unit of 100 ringgit, and total fixed cost of 90,000 ringgit per year. Here we list down all the possible outcome of the number of units will be sold, starting from 1,000 ringgit and will end at 5,000 ringgit. Just enter the amount of 1,000 ringgit here, and after that use equals, select the cell here and just add 1,000 ringgit, and after that just drag this icon down so it will copy all the format or instruction we give from this cell. Let's move to the selling price, since it's a fixed selling price, so we just type the 130 ringgit, and after that just drag this icon down so it will just copy this cell. And fixed cost also the same, since it's fixed cost, the number of units will not influence it, so just type 90,000 ringgit, and after that just drag the icon down so it will copy the cells. And let's talk about the variable cost. How we get the variable cost is by multiplying the variable cost per unit. As you can see here, we used lock to make sure that if we drag this icon down, if we drag this icon down, the variable cost here will not be dragged as well. So as you can see here, we get the variable cost by multiplying the number of units with variable cost per unit. So here you can see 1000 times 100, we get 100,000. So just drag this icon down, and the formula will also be copied to this cell and the rest. How about the total cost? Total cost we just summarize. We just add the fixed cost and variable cost together, so we got the total cost. How about the total sales? So total sales, we got it by multiplying the selling price and the number of units produced. As you can see here from the formula, we use C11. C11 is the selling price here. C11, yes, selling price here, and after that we just multiplying it with B11 the number of unit. So as you can see, 130 times 1000, we get 130,000. And just from that, we just drag this icon down, and the rest will be like this. They will follow the equation from the cell. And how we get the profit or loss cell column here, just by deducting total sales, or we just compare the total sales, or total sales and total cost, or just deduct the total sales and total cost, minusing like G11 and F11, same as the rest, just deduct the total sales and total cost together. As you can see here, when the company produce and sells 1000 units of this product, the company will suffer loss around 60,000. Same goes to when the company produce 2000. As you can see from the yellow highlight here, the company will only reach break even point when they produce and sell 3000 units of the shoes. So how we got this graph right here, just highlight the table above and use insert tool, and after that you can see we can use a lot of charts from this part and choose the suitable one to represent this graph.
So now I'm going to explain the concept behind the vertical analysis. As you can see, this is the statement of profit or loss of our group. So the vertical analysis is to show the relationship of a certain item to a base figure. So how to do a vertical analysis? The first step is to make sure that you have a complete statement profit or loss, then make a new column so you can have a clear view of the vertical analysis. Then we must choose a base figure. So for our base figure, we choose net sales for our base figure. Then we must pick what items that wants to be compared. So the items that we choose are sales return, cost of goods sold, gross profit, revenues, expenses, and net profit. So next, we want to do the formula. So the formula should be equal sign, then the cell of the items that we want to compare divided by the cell of the net sales or the base figure. So the formula should be the cells of sales return. This is one of the example. The cell of the sales return D6 divided by D7. So the D7 must be locked so we can autofill the remaining cells for our vertical analysis. So the formula should be D6 divided by D7. After we autofill the remaining cells, we have another percentage of vertical analysis for other items. So we have cost of goods sold for 40%, gross profit 60%, revenues a total of 17%, expenses 45%, and lastly the net profit 32%. So now I'm going to explain how to do a what if analysis. So the first thing that you must have is that you must have the data. So for our group, we have already have the data. So we have the data range, the data for CVP worksheet. Data for CVP worksheet. So we have a number of units, selling price, fixed cost, variable cost, total sales, and profit or loss. So what we want to do here is we go to data tab and we choose what if analysis in the forecast command. So what we want to do here is we want to simulate a scenario when the selling price is changing, what happened to the profit, or what is the value of profit when the selling price is changing. So we go to scenario manager. So the things that we need to do is we add the scenario. So the first scenario is we have the selling price increases by 10%. The second one, the selling price is increases by 20%. Next is the selling price is increases by 30%. Next is selling price increases by 40%. And the last one is the selling price increases by 50%. So when we go here, when we add a scenario, we must add the changing cells. So for our group, we add C13, which have the value of a selling price. So after we click OK, we want to enter a value for the cell. So the 10% of the selling increases, the increases by 10% for the selling price is equal to 143. And for the scenario where the selling price is increases by 20%, also the same, the changing cell is also C13. The value is increases by 20%, which amounted to 156. So for the third scenario, the value is 169, where the selling price is increases by 30%. So next one, the next scenario, the value is 182, which is the scenario where the selling price is increases by 40%. So the last one, the last scenario, the value is 175. So when we already added the scenario, we want to summarize all the scenario in one table. So just click summary and we have the result. So this is the summary table for the scenario that we have simulated. So we have the current value for our selling price is 130. So the next scenario, the selling price is increases by 10%, which amounted to 143, and so on. So we see here the selling price increases by 20%, 156, increases by 30%, 169, increases by 40%, 182, and increases by 50%, 175. So we see here when we change the selling price, the profit or loss is also changing according to the selling price.